Hey everyone, this is Craig, the options linebacker. This is the weekend report for Sunday, March 7th. I'm going to shake up the routine a little bit today and try something different. It seems to be that a lot of people were really thrown off by the recent rally that we've seen in the market, and I'd have to say that we saw this one coming. Now, to be fair, there was the possibility of a weekly lower high setting up, but what we did was we set the parameters around boxing in the daily chart so we knew which way it was heading depending on how it broke up and away from the boxes. So really this becomes a question of getting biased by what's happening in the local news, in the mainstream media, and just being influenced by the emotions that come out through the market price action. If you don't keep your biases and your emotions in check when you watch the market and watch the price action every day, you can get this feeling like you just got run over by a truck and there it was, and you feel like you're chasing the move all the way. So let's do this. Let's go over the 4 cycles of a market move, and they are starting with euphoria, then we move to disgust, disbelief, acceptance, and then finally back to euphoria. These are the stages of a market rally that occur over and over and over again, and the reason why they repeat is because they're based on human emotions, which so far I have not seen change. Now, as we got into early January, we definitely had a case of euphoria. We broke out of a box pattern here. That was a big consolidation from November through December, broke out to the upside, made new highs for the year, and that was on top of a rally that had already gone a long, long ways. And so you got the feeling that around the beginning of the new year, where things can be very tenuous around the beginning of the year. You just don't know which way they're going to break. But as it showed, the market showed that it had a hand, that it was breaking up. A lot of people got very, very comfortable with the market and started to feel that euphoria phase right here. Now, when everybody is convinced that the market is going higher, that's when you have to be on your guard as a contrarian, because that's usually where the rug gets pulled out and the trap door opens up. And that's exactly what happened just a few days later, as the president announced that he was going to go after the banks and separate the trading operations from the mainstream banking operation. So as that move got started, we can see, as we're looking at the hard right edge here, this is hard right edge analysis, that we had a couple of bad days and all of a sudden there was a shot over the bow. Now we had some consolidation, which was just nothing more than a small little bear flag. And down we went again. Now we did have a dead cat bounce for a couple of days, but this was on very low volume. And this was really the beginning of the second wave down. And so here we go. And we're definitely in a period now as we get into early February where we have our second phase of the market. By this time, we've started to put in waves down, and the market has now reached a level of disgust. Everybody is saying, wow, what happened to what was just happening up here in early January? I can't believe I didn't sell when I was up there, and I just bought, and I'm holding underwater now. And this is where a lot of people wash out, and you can see this by, it's usually labeled by these hammer candlesticks is when the final washout occurs on these moves. So here we have the second phase of our market rally, disgust, right here, which was right around the first week in February. Everybody's disgusted with the market, and the bears by this time are licking their chops saying, wow, just give me a little pullback and I'm going to ride this down to S&P 600. So what happens after this? Well, of course we do get a little pullback. There's always going to be a little bit of an oversold bounce. Some people call this a dead cat bounce. And look at this, we got a little bit more than that. Now the first clue that we had something going on here was the price actually took out the prior swing high. And I'll mark that right up here. So that's actually fairly significant that it did take out the prior swing high. Now what we also did was we boxed in this area with the fib retracements. And we did that by starting at the top, going to the bottom, and we said that a bounce will probably occur either at 38 to 50% or as high as 61.8% retracement. Now if the price gets past 61.8, the probabilities have increased for filling up the entire triangle. In other words, going all the way back up again. So now at this point we have our third phase. We have disbelief. especially from the bears, because many of them finally got comfortable down here with the idea of shorting the market. They weren't going to short up here. This was way too euphoric up here. Some of them perhaps got in up here and they held down to here, so they had a nice gain. But the majority of the retail traders, the ones that are part of the herd, the ones that are always late to the party, waited until this point here where they got finally comfortable with shorting the market, because the bounce actually was rather tepid by that point. Again, we were expecting a bounce up to at least 38.2, 50%, or as far as 61.8. So at this point, everything is still favoring perhaps another move lower. But because of the fact that the prior swing high was taken out, now the odds have tipped in the other direction. And what we were looking for here was a quick pullback at this point and perhaps the launch higher. Now here's the dagger in the heart of the bears. This is what happens, is that as we get up to that 61.8, look at this, we had a strong day to the downside, okay? And what this does is this emboldens the bears, because if you look at this chart now, we do have a lower high setting up. So this is after a lower low, we have a lower high setting up, and this is by definition a classic Dow theory downtrend. So we have a downtrend defined. This is where the average retail trader says, okay, now I'm bearish, I'm ready to short. And unfortunately, again, we're still in disbelief because they can't believe it's come this high. So now they're feeling a little bit more comfortable with shorting the market. But the smart money has already seen that the prior swing high has already been taken out. So what happens next is one of the nastiest things that you can imagine in the marketplace when you're expecting this to head down, because that's what the daily chart is showing. Look at this hammer right here. This was the dagger in the heart. As the price actually came down to the 38.2% retracement of this move up, and then since then it has been nothing but a ballistic rocket ride, especially on Friday after the jobs report. So I think we're still in the disbelief phase here. Especially the bears and the blogs that I follow that are bearish are just utterly shocked right now. They just can't believe it. They didn't see this whole thing coming, but if you know what to look for, this isn't that difficult. Here's the key. This day right here is when the change in polarity really occurred, because that set the hook with a higher low. That was the first higher low that showed up in this whole move here. Once the higher low comes along, this is wave 3 to the upside, and don't stand in front of it. Now, if you go over the last few videos that I've posted here lately, you'll see that what we've done is put good use to the March 2007 analog. So here's what happened 3 years ago. We had this nasty day that came out of nowhere, literally after the market had been rallying straight up, just like recently. The market had been rallying straight up since August of 2006 all the way till late February of 2007. So at this point, we're definitely in the euphoria phase up here. And then all of a sudden we have a wave-based movement to the downside we have discussed. And then look at this, we have the same pattern here. We take out the prior swing high, come down, put in a lower high on the daily chart, set the hook right here, and then it was just a rocket ride to the upside. So getting back to today's price action, if this pattern has given you trouble over the last couple of months, learn the 4 phases of a market rally, and I guarantee this will help you going forward. Thanks for watching, everybody. Have a great weekend.